Right, Patanjali Foods is on our radar for Q1 earnings. The company, if you remember, a couple of days ago reported their numbers and witnessed a sharp contraction in margins, while the correction in edible oil prices hurt their EBITDA. Also, the edible oil business has reported an EBIT loss this time. So let's find out more about that. Sanjeev Asthana, the Chief Executive Officer at Patanjali Foods, joins us now to talk about that. Sanjeev, thanks a lot for joining in. Can you tell us, on the margin picture itself, there was a sharp contraction this time around. What is the expectation as we move along? And what is your market share in the edible oils business now? The last time, I think you said it stood at somewhere around 8.5%. Has there been any change to that? So both on margins and on market share, what's your view?
So thanks for having me on the show. Two quick sort of reasons for this contraction in the margin that we witnessed. That the global prices on the futures exchange, where we hedge our risk, both at Chicago as well as at the BMD, those markets went up nearly 10%, but the domestic markets did not react at all. And so they marginally went up. So on one side on the hedges is that we had to give up some money into the book losses, as well as on the accounting standard, a lot of mark-to-market sort of we had to take in the account quarter end. This quarter we're expecting, and the quarters going forward, I think this trend should get reversed. And pretty much on course for the whole year, we're expecting between 2 and 4% margin from the edible oil business. And I think it should be viewed also in that perspective with a longer term time frame. In terms of the market share, we are pretty much 9%. Our volumes have grown nearly 35% from last year. So there's a very steady growth that we are getting compared to between 3 and 5% growth in the overall market size. So the growth levels are very impressive that we're attaining, and we'll continue on the same trajectory.
So you said the EBITDA margins in the edible oils business will be between 2 and 4%. That's what you had guided for earlier as well. On the top line in the edible oil space, you said that FY24 revenues would be flat. That was your statement earlier. You continue to hold on to that. And what about in FY25? Any kind of growth that you're expecting to see?
So what happens, Sonia, is that the edible oils are quite volatile. So we've kept the price, pretty much stable where it is. Our volumes, as I mentioned, have grown 35%. Our expectation is that we should grow at more than 10% this year in the business, and longer term it will stabilize at about 6% growth rate compared to between 3 and 5% what the market is growing. So we don't look at revenues per se because the price points can be different, but of the margin as a percentage of revenue will remain between 2 and 4%. So I'm expecting pretty much that this year, if we see some spike in prices, because prices have tended to take off compared to last year, we should see our revenue expansion as well.
Mr. Asthana, hi, good morning. Sorry, please finish. Sorry.
No, I said it's less relevant for the business in terms of what overall revenue are likely to be. I think the two matrices we look at is the volumes as we're growing, which means we're gaining the market share overall. And second is in terms of the EBITDA margins that we tend to make in the business.
Okay, got it. Now, Mr. Asthana, let's get from edible oil, let's get to the foods business. Could you talk to us, give us a similar kind of indication on volume growth, market share and margins from the food segment? We have, some outlook that you provided earlier. So just an update would help there.
So foods has been, FMCG overall business has continued to grow quite substantially. We did about 361 crores in this quarter, 18.5%. Margins across categories have continued to grow. And right from, and this is a good spread that we have. So from nearly 19% margin on the food business to about 10.1% that we have on the biscuits. The expectation is that on an overall FMCG as a category, we will maintain our direction that we've given, about 18% plus margin is what we expect. And longer term, I expect that this should improve only because of two reasons. That one is the premiumization drive that the company has taken. We have made a series of launches in nutraceuticals, in biscuits, as well as the dry fruits. And in the months ahead, you will see a slew of launches that we were planning. So overall, we are expecting that this pace of growth of both the revenues as well as the margin construct should continue based on that.
All right. Hi, Mr. Asthana. Good morning. Reports suggest that Adani is looking to sell stake from Wilmar. Would you be interested in buying?
We don't need to buy Adani's stake. Yes, we also keep hearing the reports, but we are pretty sort of self-sufficient. Our growth rates are good, and we feel pretty confident that we'll be able to grow the company substantially.
Okay, all right. So we got that. Also, your palm oil business, you're expanding there through plantation. Could you tell us what's the timeline and target? I think earlier you were indicating, close to under 1,100 crores odd, margins of mid-teens approximately. And we're talking about improving profitability big time as well. Tell us more.
So we, oil palm business, as we had sort of declared the intent, and there's a lot of good work which is happening on that front. We were recently in Assam as well for the mega oil palm plantation drive. We've signed multiple MOUs with government of Telangana, with Assam. So we nearly have about 634,000 hectares of land which has been allocated to the company. We've set up 11 nurseries. 4 more are getting set up in the next 2 quarters. Our oil palm sort of mill is coming up in Arunachal Pradesh. We have taken land in Assam for oil palm mill. So there's a lot of flurry of activity which is going on there across, in the southern India, in Telangana, Andhra, and Karnataka, and in the northeastern states. So we are very bullish, both in terms of, how business will integrate itself in a much more significant way. Currently, we get about 10% of our palm oil requirement from oil palm plantation. We're expecting this in fullness of time, which is all more than 6 to 7 years' time. This is going to be nearly 70%. And this will bring in synergies between the two quite substantially. And we believe that on the overall palm oil as a segment, we should have an uptick of more than 200 basis points once the full synergies come in. And the volumes also grow to close to 1 million tons of our oil palm plantation business.
Okay, just one final question. You were talking about the food business and the growth that you're seeing there. You spoke about 18% EBITDA margins of food business. But within these categories, whether it's biscuits, Nutrella, dry fruits, nutraceuticals as well, or rather just in the food business particularly, can you tell us which are the segments which are doing very well, where there is a substantial amount of growth? And do you hold on to all of these targets? Biscuits, breakfast cereals, you were expecting about 1,400 crores. Nutrella, your revenue target was 5,000 crores in FY24. Any more updates on that?
So we are holding on to both the targets that we have set. As I mentioned, that the expectation is that the EBITDA margin should be 18% plus. Our guidance earlier was between 16 and 18%. We are getting reasonably confident with the growth in the first quarter that we should do about 18% plus for the year. Our revenue growth momentum will continue. Biscuits are growing nearly at, they grew 35%, but it will taper off closer to 20% year on year. Our nutraceutical business is growing well, foods is growing well, and as well as soya protein business. So we're pretty much, on course to achieve the revenue growth that we have for the year of close to 7,000 crores in the FMCG businesses combined.
Mr. Asthana, we'll wish you all the luck. Thank you very much for joining us and running us through all of that detail here on CNBC TV18. Thanks indeed. That's Patanjali Foods.